Welcome to our channel. Don't forget to subscribe, like, and share. Here we dive deep into the world of investments and financial insights. Today we explore one of the most intriguing and time-tested assets, gold. For centuries, gold has been a symbol of wealth and a secure investment during times of economic uncertainty. But what makes gold such an essential part of an investor's portfolio? And what can we expect from gold prices in the coming decades? In this video, we'll break down expert forecasts and trends to give you a comprehensive outlook on gold prices from 2025 to 2050. Let's begin our journey with the near future, the gold price forecasts for 2025. Before diving into the future forecasts, it's crucial to understand how gold has performed historically. Gold has been a reliable store of value for centuries, often seen as a safe haven during times of economic turmoil. From the gold rushes of the 19th century to the economic recessions of the 20th and 21st centuries, gold has consistently proven its worth. During the 2008 financial crisis, for example, gold prices surged as investors sought stability amidst market volatility. Similarly, during the COVID-19 pandemic, gold prices hit record highs, reaffirming its role as a hedge against uncertainty. Understanding these historical trends can provide valuable insights into what might influence gold prices in the years to come. Now let's move on to the expert forecasts for gold prices in 2025. Before we delve into the expert forecasts for gold prices in 2025, it's essential to understand the various factors that influence gold prices. Several key elements play a significant role in determining gold's value, making it crucial for investors to stay informed. Pause 2S. Firstly, economic indicators such as inflation rates, interest rates, and currency values have a profound impact on gold prices. When inflation rises, gold is often seen as a hedge against the decreasing purchasing power of money. Pause 2S. Similarly, lower interest rates can make gold more attractive since the opportunity cost of holding non-yielding assets like gold decreases. Geopolitical events also play a substantial role. Pause 2S. Political instability, conflicts, and economic sanctions can drive investors to seek the relative safety of gold. For instance, during times of war or political unrest, gold prices often surge as it is perceived as a stable investment. Additionally, market demand and supply dynamics are fundamental. The demand for gold in industries like jewelry, technology, and even in central bank reserves can affect its price. Conversely, mining production levels and new gold discoveries can influence the supply side. Lastly, investor sentiment and speculative activities cannot be overlooked. Market perceptions and the actions of large institutional investors can cause significant price movements. Understanding these factors provides a foundation for making informed investment decisions. Now let's move on to the expert forecasts for gold prices in 2025. Before diving into the expert forecasts for gold prices in 2025, let's take a moment to understand the importance of gold within a diversified investment portfolio. Diversification is a fundamental strategy for managing risk and enhancing potential returns. Including gold in your portfolio can provide a hedge against market volatility and economic downturns. Historically, gold has shown a negative correlation with traditional assets like stocks and bonds. This means that when the stock market experiences a downturn, gold prices often rise, offsetting some of the losses in other parts of your portfolio. Moreover, gold's intrinsic value and limited supply make it a reliable store of wealth, particularly during times of financial uncertainty. By holding a portion of your investments in gold, you can reduce overall portfolio risk and achieve more stable returns over the long term. Additionally, gold can act as a safeguard against inflation and currency devaluation, preserving your purchasing power. As we move forward with the gold price forecasts, keep in mind the strategic role that gold plays in a well-balanced investment approach. Now let's explore the expert forecasts for gold prices in 2025. Throughout history, gold has often been viewed as a safe haven asset during times of crisis. But does it truly live up to its reputation? When financial markets are in turmoil, investors seek stability and security. Gold, with its long-standing intrinsic value, limited supply, and universal acceptance, becomes an attractive option. During the 2008 financial crisis, the price of gold surged as investors flocked to it as a store of wealth. Similarly, in the early stages of the COVID-19 pandemic, gold prices reached new highs. These instances highlight gold's resilience and its role as a protective asset. However, it's important to note that gold is not immune to price fluctuations and market dynamics. While it can provide a buffer against economic uncertainty, it's not without risks. Understanding the historical context and current market conditions is crucial for making informed investment decisions. As we delve into the expert forecast for gold prices in 2025, let's keep in mind the role of gold in times of crisis, and how it might serve as a safe haven in the future. While gold often takes the spotlight as an investment, it's worth considering how it stacks up against other precious metals. Silver, platinum, and palladium also play significant roles in the financial markets and industrial applications. Silver, for instance, is not only a valuable investment but also a critical component in electronics and solar panels. Historically, silver prices have shown higher volatility compared to gold, but this volatility can present opportunities for savvy investors. Platinum and palladium, on the other hand, are heavily used in the automotive industry for catalytic converters. These metals have seen price surges due to stringent emission regulations and supply constraints. Diversifying into these metals can offer a hedge against the risks associated with gold and provide exposure to different segments of the market. However, it's essential to understand the unique factors that drive the prices of each metal. By comparing gold with other precious metals, investors can make more informed decisions and potentially enhance their portfolio's performance. Now let's turn our attention to the expert forecasts for gold prices in 2025 and beyond. Many banks, including Goldman Sachs, Citi, ANZ, and Commerzbank, raised their initial forecasts for gold, as they were faced with the possibility of a banking crisis. Goldman Sachs analysts initially expected the price of gold to remain stable in the period between 2023 and 2026, at around $1,970 an ounce. They hiked their 12-month gold forecasts to $2,050 an ounce. Gold's price forecast for 2025 at the Bloomberg terminal is between $1,709.47 and $2,727.94. Bloomberg intelligence strategist Mike McGlone predicts that both gold and its digital version Bitcoin will appreciate by 2025. The price of gold has shown divergent strength, being up 84% since 2015, when the Fed just started its tightening, and could be heading for $7,000 by 2025. It is generally believed by commodity analysts that the price of gold will keep rising in the long term. However, it is difficult to accurately forecast the price of gold or the price of any commodity for the next 2 decades, as the price depends on several different factors. These include the inflation rate, the strength of the US dollar, central bank interest rates, and the increase in the money supply. Most major banks and financial data providers, such as Bloomberg, provide only short-term price predictions. An additional reason is that commodity markets can be highly volatile, and small changes in supply or demand factors, along with external events like geopolitical tensions or extreme weather events, can lead to unexpected price swings. This volatility can challenge the accuracy of predictions. Despite the complexity of long-term price predictions, there are different scenarios and long-term price forecasts for gold from 2030 to 50. Those range from gold reaching $10,000 per ounce, replacing the US dollar alongside Bitcoin, and even the scenario of the world running out of gold by 2050, faced with growing demand. The $7,000 an ounce scenario seems to persist in gold forecasts for 2030. In the rational case for $7,000 gold by 2030, economist Charlie Morris predicts the $7,000 price milestone. Morris describes gold as the leading major asset class in the 21st century, which is an extraordinary achievement given that gold doesn't pay a yield. Investment analyst Jim Puplava predicts a significant bull market by 2030, citing demographics and globalization as the primary reasons for the price increase. At the turn of the century, when gold was below $300, Puplava correctly predicted a 10-year bull run in precious metals. According to the Monetary Climate Change in Gold We Trust report for 2023 by investment managers Ronald Peter Stofferle and Mark Valek, certain profound changes in fiscal and monetary policy will have tangible consequences for the monetary system and ultimately for the population. High inflation will persist, increasing the need for safe haven assets like precious metals and cryptocurrencies. Central bank demand will become a key driver of this gold bull market. Gold price forecast for 2040. David Harper predicted that the price of gold could reach $6,800 an ounce by 2040, estimating a rate of return of 7.2% per year. This scenario, according to Harper, describes a reasonable return. Harper's methodology is based on historical data analysis, calculating that if you bought gold in 1976 at a low of $103 an ounce, and held it without interruptions to the peak of almost $1,900 in 2011, you earned a rate of return of 8.5%. Gold price forecasts until 2050. Commodity analysts who make long-term forecasts believe that the price of gold will generally keep rising in the next few decades as the demand for the precious metal increases. In a research paper recently published in the journal Trends in Ecology and Evolution, Josep Penuelas, a research professor at the Center for Ecological Research and Forestry Applications of the Autonomous University of Barcelona and at the Higher Council for Scientific Research, warned that by 2050, the world could run out of essential metals, including gold. Other theories about the future of precious metals, however, are more optimistic. Gold has been here since eternity, according to Robert Kiyosaki, and being God's money, it is likely to become the main form of currency in the future. In his book Fake, Kiyosaki examines the future of money and claims that ultimately gold alongside Bitcoin could erode fiat currencies. Short-term price predictions for gold suggest an increase in its value and demand in the next years, at least until 2030, showing the price could gradually rise to around $7,000 an ounce. But price predictions beyond this date could depend on different scenarios. Ultimately, when it comes to long-term forecasts, there are fundamental questions to consider regarding the importance of safe haven assets like gold in an ever-changing financial landscape.